Finally, the third method is to compare the company on the basis of other companies like it, in the same industry, similar size, similar geography, technology, whatever it might be. And what we do is we use ratios that are standard in the industry, such as price to earnings, price to book, price to cash flows, EV, enterprise value to EBITDA. So, for example, if I was looking at Johnson & Johnson, and I took an average of the companies that were similar to it, so let's say Merck, Pfizer, I use J&J a lot because it's a really good example, Merck, Pfizer, Eli Lilly, others that are in that space, and we came up with an average price to earnings ratio of 28.13 for those companies. J&J's earnings per share most recent was $5.40. So if I multiply those two together, I get a value of approximately $152. J&J is trading approximately $140, I think, currently. If I look at a price to book ratio, the average comparables are significantly higher than what J&J is. J&J has a $22 book value per share. If I multiply this through, I would actually get a $400 valuation on J&J, which seems extremely high. What we actually do as well as part of this is we look at making adjustments. If this company traditionally always has its ratios higher or lower than the industry that it's in, we can actually make an adjustment. So in this case, the average that we're seeing is considerably higher than what we would normally see for J&J. So it's quite a punitive adjustment, which brings the valuation back down to 151. I didn't arbitrarily pick the minus 64. I actually calculated that over the last 10 years. How does J&J's price to book value compare to the price to book value in that industry? And it's traditionally significantly less. Conversely, its price to cash flow is a bit higher. So you can see once we've done the adjustments, we come up with a weighted average valuation here of approximately $142 on Johnson & Johnson, which is about where it's trading at right now.